Hello everyone, so today I will be going over how I build my checklist, what it looks like, how I divide all the setups and how I implement it into real, live trading. First, let's take a look at this Excel file. So I call it the Euro and the Japanese Yen checklist Excel file. I have it divided into 3 sheets. First sheet is called General Characteristics. So those are all of the characteristics for the pair. Of course I have more, but I deleted them because I don't really want to put them online. But I just have some examples for you to see what I mean. So first one will be that small and big wicks are okay. So that is a common characteristic of the Euro and the Japanese Yen, because it does like to wick a lot. It's a wicky pair. And then I have that this setup works very nice, so it's an ultra high probability setup if we get a smaller ascending descending in a bigger ascending descending. And then I have that a larger bomb is okay on this pair. For some pairs it's not good, like for the Aussie and US dollar, but for Euro and the Japanese Yen, when I see a larger bomb, I do take them, so I wrote it down here as a characteristic. Now let's move on to the second sheet, which is the bullet entry. So this is actually a simple break and retest, but we call it the bullet. And this is just a flag pullback, but we call it the bomb. Let's take a look at the bullet. So we have right here, I divided it into 3 parts. The first part is if it's a reversal bullet. Second part is if it's a continuation bullet. And the last part, if it's a bullet, same as ascending or descending. So let's take a look at now, for example, the second part. I also deleted most of the data because, as I said, I don't really want to share it online. So let's say we have a continuation bullet, and now I divided this part into 2 parts. First part is if it's coming from a regular price action, and the second part is if it's coming as a high probability setup, if it's coming from high probability price action. And then I divided it if it's a 1 candle impulse break, a 2 candle impulse break, or a large impulse break. Then let's zoom in a bit. So after that I have if it's coming from range bound price action, if it broke out of a range, was it a start of a trend, or was it pure trending price action? This one would be very high probability, and I would be very lenient when I see a trending price action, because I want to get in when there is an established trend. Then I see if it was a clean close. Did the impulse leave a large wick? Did it leave a huge wick, double wicks, or large double wicks? And the last thing I do have is if it was a V reversal in the pullback. So is a V reversal in the pullback allowed, or is it not allowed? This is very important to me because I want to see how the pullback looks like, and if I do allow a V reversal or not. Now let's take a look at some of the real data that I gathered through backtesting and other forms of data collection. So let's say, for example, that we see a reversal bullet. We see it coming from regular price action. Then I zoom in a bit. It is a 1 candle impulse, and the overall price action is range bound. Then I take a look at how the impulse ended. So let's say it ended with a clean close. There was no wick at the end of the impulse. It was a very clean close and a very good candle. Well, it's still a no trade for me. That's why I wrote down no trade. So when I see it, I don't want to be taking any trades. It doesn't fit my plan. It doesn't fit my checklist. So it's a no trade. But then let's say for example that we do have a reversal bullet. It is a regular price action. It is actually a large impulse. And there is a large wick on the end of this large impulse. And we are trending. Let's say the overall price action is trending. Then I take a look at what I have under trending price action and large wick. I have that there must be no large momentum shift and that there must be a range. So how would that look like in a real live market? Let me draw it down. So it would be, we have this descending, just a regular descending, nothing special. We then have a reversal to the upside, nice large impulse. But let's say at the end of the impulse, so imagine that we do have a large wick. Well, what I then need to see in the pullback, I need to see no large momentum shift and there must be a range. Oops. So if we get a V reversal, this is a no trade. If we get just a setup without a range, no trade. But if we get no large momentum shift, we get a small range. And then we get the setup, then I'm in. Then it fits my plan and I will take it. According to the checklist, of course. So no large momentum shift and there must be a range. Now let's take a look at one more, but let's say that we are coming from high probability price action. It is a reversal bullet. It is coming from high probability price action. Let's zoom in. So let's say that it is a setup that I call, let's say it is a big impulse, then ascending, descending. Let's say it is this sort of setup, which I found that on this pair is very high probability, and when I see it, I definitely want to take it. And let's say that it is just a one candle impulse. So let's say it's trending price action. And let's say that there is a large wick at the end of the impulse. What do we have here? Well, we have take it. So whatever happens, I take this trade, it fits my plan, fits my checklist, I'm in that trade. So let's now also take another example. Let's say that it is a, let's zoom out, it is a reversal bullet. It is a high probability setup. Let's say it is also a big impulse, then ascending, descending, which is high probability according to my backtesting. That the impulse is large, so we have a large impulse, and that the overall price action is range bound. So if the overall price action is range bound, and let's say that there is a double wick at the end of this large impulse, well, we then take a look at this cell, and what do we have here? We have no large momentum shift, plus there must be a range. Let me draw it down for you so that you can maybe visualize what I'm saying. So we have a range. As I said, it is a range bound price action for this example. Then we have a large impulse and we have a small descending at the end of the impulse. After this descending, we have a reversal to the upside and it is a large impulse also. And now imagine, oops, it's a large impulse. And now imagine that at the end of this impulse, there are double wicks. So then I don't want to see a reversal. I don't want to see a straight setup. Just a second. I don't want to see a straight setup without a range. But what I want to see no large momentum shift. I want to see a range. And then I will look for an entry. So this is all according to the checklist. Let me just delete. Oops. So delete this. You can see it right here. So no large momentum shift, must be a range. If I see this, I'm in the trade, no questions asked, it fits my checklist, and through my backtesting I have found that it is profitable. Now let me show you also the last sheet, which I call, as I said, the bomb, or it's a flag, same thing, it's just an entry criteria. And let's say now that it is a continuation bomb and that it is a high probability setup. So I see that it is that in the live markets we are forming a continuation bomb. It is a high probability setup. Let's zoom in. And for example, let's say it is a big strong impulse with a small inside bar pullback in the prior price action. Let's say it's just a one candle impulse, which I'm currently looking at. And let's say that we closed with a large wick, that this impulse closed with a large wick, and that the overall price action is trending. Well, then what is in this box or cell? So it states that there must be a range. Now let me draw it so that you can maybe understand it better. So we are trending, we have this large impulse, small inside bar pullback, and a one candle continuation. Imagine now that there is a large wick on this impulse. Then if I see a reversal to the entry point, if I just see a reversal, it's a no trade. If I see a straight bump or a flag form from here without a range, it's a no trade. But if I see a range, so if I see something like this, pullback range, break of the low and a retrace, this is a flag, this is a bomb trade, then I'm in this. I would take this, it fits my plan. We have large impulse, small pullback, one candle impulse continuation, large wick on top, and then we have this range, because you know when I see a large wick, I want to see a range after it. And now you may be wondering, so what do these numbers in bold mean? Let's just take one of them for example. Let's say this number 6, which says no large momentum shift, number 6. Well, I actually do have a Word file as an appendix to the Excel checklist. So this would be an appendix to the Euro and the Japanese Yen checklist. And let's find the number 6. Where is it? Right here. So it states no large momentum shift, and this would be a number 6, no large momentum shift. Why do I have this? Well, it's a visual reminder of what to look for or what to stay out of, because just words for me are not enough. I need to see it in visual form. I need to see real candles showing me and explaining what the text meant. So this would actually be a large momentum shift. So we do see an ascending in this setup. We see a large impulse to the downside. We see a large wick at the end of the impulse, but then we see a large momentum shift. So this is a no trade. When I see a large momentum shift in this sort of setup, it would be a no trade for me, and I know to stay out of the trade. But if there was no large momentum shift, so if these two pullback candles didn't exist, I would then definitely look for a setup. And as I wrote down, large impulse plus large wick, no large momentum shift like this, so this is a no trade for me. Let's take a look at another number. So for example, number 12 right here. So this would be a, I think it's the reversal, no, it's the continuation bomb. Let me zoom in a bit. It is a high probability setup. Let's say one of these. It is just a one candle impulse. The price action is trending. We are in a trending condition, and it is a clean close. I wrote down it must be a good candle. So the impulse candle must be good. What do I mean by this? Well, that's why I have the appendix, so that I can visually represent the words. So let's take a look at number 12. Where is number 12? Oh, right here. So this is the setup. We have trending market, a large impulse to the upside, small pullback, small inside bar pullback, and a continuation. One candle impulse continuation. But this is not big enough impulse for me. It closed okay, but the candle is just not big enough. And if I see something like this, it would be a no trade for this particular setup. But then I also have under number 12, I have this. So this I would take. This is a good candle for me. Why? Because there is no wick on top. We have a large wick to a downside, signaling that the strength is up. And this would be just a really clean setup. Let me zoom in a bit. And as I wrote down, this is good enough because of the clean close. This clean close is good for me. Through backtesting, I found that it works. Let's take another example. This would also be a large impulse, one candle pullback continuation. And this also, as I said, this is good because it was a large candle. Doesn't matter that it didn't break by much. It is a large candle. It is a very clean close. Let me zoom in, maybe you don't see it. And I would be willing to place an order right here. So this looks good. See, this is why I have the appendix, so that I can visually represent what I mean by words. For example, when I would see this, no trade, this I'm in 100%, this I'm in 100%. So yeah, that is what the numbers in bold mean. You can use that, you don't have to. For me it works, I'm a visual learner, so it's very important. But yeah, so let me just go over the overall structure once again. Just to repeat, I have 3 sheets. First one is characteristics, second one is the first entry, so type the bullet entries, and the last one is the bomb entry type or a flag. Then I have it divided into 3 parts. First is the reversal bomb, continuation bomb, bomb same as ascending, descending, And then I have the same template for all of them. So is it a 1 candle impulse, 2 candle impulse, or a large impulse? As you can see, is it coming from range bound price action? Did it break out of a range, start of a trend, trending price action? Did the impulse finish with a clean close, a large wick, huge wick, double wicks, large double wicks? Or what, can the pullback be a V reversal? Or does it have to be more of a corrective pullback? That is why I have V reversal right here. And yeah, that is it. This is how I divide my checklist. It's very thorough and it's very dependent on how a particular setup looks like. So it makes sense to me because it removes discretion, in my opinion. And yeah, so that is it. That is it for the checklist. How do I fill out this data? So I backtest and I do hyper learning, which is watching videos like trade recaps from my mentor, and then I fill out these boxes depending on let's say how a certain particular setup plays out, what I want to see, what I don't want to see. Then I write it down in this checklist and then I have it for live trading. So that is how I fill out the data, and that is the overall structure of my checklist. So we have two files, we have the Excel file and the Word appendix file. Thank you for watching, I hope you enjoyed it, I hope you took some value out of this video and maybe it helps you to build your checklist. Of course, you don't have to have it like this, you can simplify it, this is very detailed. But yeah, so that is it, thank you for watching and I will see you in the next video.